Hi there, my name is Jamie. Welcome to this month's video under the Quick Market Talk with Expert series. Today, we have renowned financial columnist, author, and inventor of the Guppy Multiple Moving Averages with us. Hi Daryl. 3 weeks ago, we discussed your view of the Hang Seng Index, where you cited 18,000 as a support level and 22,000 as a resistance level. Since, the market touched a low of 18,130 on the Hang Seng futures on the 1st of June, and rebounded more than 1,000 points off that. Do you now have an updated view on what investors should look out for in the Hang Seng Index? I'm also keen to know if you have any observations on Hong Kong listed shares, whether you have noticed similar or different patterns from the Hang Seng Index.
Hello, I'm Daryl Guppy. In this episode, we're going to look at the Hong Kong Index, the Hang Seng, and then look at how that helps to identify the ways that we should be trading some individual stocks. Every analysis of the market and a trading opportunity starts with analysis of the index. The most important features on the Hang Seng are the support and resistance levels. Support at 18,000, resistance at 22,700. The breakout from the downtrend line did not develop into a long-term uptrend. It encountered resistance at 22,700 and has come back to retest support at 18,000. We anticipate that we are likely to see continued trading sideways within this trading band. That determines the strategy that is appropriate for the stocks that we look at. We do not need to make this more complicated than it needs to be. BYD is an example of a pullback to an established trend that provides an entry point at a point of temporary weakness in the trend. So what we're looking for in this type of situation is uptrend continuation. Now that wasn't too difficult, was it? The trend was clear. The opportunity is clear. You need to drill down to the detail of how you might time your entry or your exit, but the strategy is clear. And the same applies when we start looking at trend patterns of behavior. The Hang Seng is defined by support and resistance, by trading bands, and we can see the same behavior repeated in individual stocks. Ping An has a well-defined support level through here. What we're looking for is a test and a rebound rally to develop from the current test of that support level. It's not easy to decide how far the rally will go. There's no obvious resistance levels on this particular chart. So that sort of trade becomes a momentum trade. However, failure of the support level to hold gives us a downside target in this support band through here. So the key factor here, a continued rally has no upside target, so we've managed as a momentum trade, but a fall below the support level has a downside target set by this lower support band.
Hey Daryl, just pausing right here and paraphrasing what you just said about Ping An shares. Basically, you think Ping An has got further upside should it be well supported above the support level you drew out at around $51.30. Now currently Ping An shares are trading at $53.60 as of 3 p.m. on the 13th of June, well above the support level you indicated on your chart. One of the options is to enter into a long or bullish position in Ping An shares listed on Hong Kong Exchange, of course. However, another option for you to consider is to enter into this long position via a structured call warrant tracking Ping An shares listed on the Singapore Exchange. The second option allows you to enjoy potential leverage returns in the short term while paying a fraction of Ping An's share price without leaving the Singapore Exchange. Let me show you quickly how this call warrant will work. One of the websites I'll recommend anyone to use to find out more about warrants is warrants.com.sg, Macquarie's warrants website. A good tool to use to simulate the returns on a warrant given your view is the Warrant Selector tool, found under the Warrant Tools drop-down. Click into it and you'll be taken to the tool where you need only to enter your underlying of choice, and because we are bullish, we will select the call icon. While Daryl has got no upside target price on Ping An shares despite his bullish view, we have a quick look at how the stock has performed And we can see that it traded close to the $65 level around January this year. And so if we thought that $65 was a possible upside target, which is 20.8% higher from Ping An shares as of 3:15 p.m. on the 13th of June, we can then proceed to increase the number of weeks to see how this call warrant PNQW tracking Ping An shares will perform in the short term. Now, this warrant costs only 0.9% at this point in time. However, if Ping An shares were to gain 20.8% in the next week, it would produce a magnified return of 289%, rising from 0.9% to 3.5 cents. In 2 weeks, it would rise to 3.3 cents. And as you increase the number of weeks, you'll notice that the price gain on the warrant is in fact smaller than if the shares took just 1 week to head 20.8% higher. Nevertheless, this remains a magnified return relative to the shares. However, what's worth noting is that if your view was wrong, and if Ping An shares were to trade back down to its support level, in this case, a 4.6% drop from where its current underlying share price is, this call warrant will be providing a magnified loss instead, dropping from 0.9% to 0.5 cent instead. Daryl, now that you have provided a Hong Kong share that looks bullish in the short term, do you have a view on which shares listed in Hong Kong looks a little bit bearish at the moment?
JD.com leaves no doubt. This is a solid, well-established downtrend. It has significant resistance sitting at this level here. The long-term group of moving averages is well separated, telling us that investors sell every time there's a rally. They sell into the rally to realize profits or to limit losses that are beginning to develop. So this rally is most likely to continue to move down. A clear downtrend, a clear trading strategy.
And Daryl, if you are wanting to trade the downward trend in JD.com shares, one of the options that you can consider is using a put warrant. Put warrants head higher when the underlying prices come off in the short term. How will put warrant over JD.com trade? Let's have a look at warrants.com.sg again. To simulate a return on the JD.com put warrant, we can again use the warrant selector tool. In this case, we need to formulate a target price that we can exit from the put warrant. Now, this is important because we need to know where our profit-taking level needs to be. Well, Daryl has highlighted that this is on a downward trend with no clear target price. When we look at the chart, we can see that it recently traded to a low of around $125 around the end of May. Now, if you were to use that as the near-term support level, or where we think we can project JD.com to trade downwards to, that is a 15% drop from where it is trading today on the 13th of June. Increase again the number of weeks to see how this put warrant will perform. And you can see that in a week's time, entering into this put warrant today at 11.2 cents will generate you a 35.9% return in a week. And in 2 weeks, it will generate a 35% return. Now, increase the number of weeks to see the maximum holding period on this warrant. In 10 weeks, it will continue to produce a return of 31.6%. However, what's worth noting is if you look at the expiry date on this warrant, it is on the 4th of October. Now, the last trading date of the warrant is 5 business days before. And if you weren't sure, you can click into the warrant code, go into the warrant terms, and look out for the last trade date. In this case, it is on the 27th of September. So this means is that if the put warrant continues to generate returns for another 3 or 4 months, what you have to note is that for sure the last date of trading out of this warrant is on the 27th of September 2023, 5 business days before the official expiry date stated in its name of 4th of October 2023, read backwards in the warrant name. Daryl, we've covered 2 stocks, one with an obvious bullish trend and one with an obvious bearish trend. But any stocks that looks to be trading in a sideways range, similar to the HSI index?
Hong Kong Exchange is trading between a support and resistance trading band. That means that the rally that's taking place at the moment is likely to be limited by this strong resistance level and a return to a retest of support. The most likely outcome is trading between the trading band, between support and resistance, rather than a continuation of the trend with a strong drop below the support level, or a reversal of the trend with a strong move above the resistance level.
Now with a sideways market, one can use a warrant to either go long when the stock is on the bottom of the range, or one could use a put warrant to short the underlying if it was trading at the top of the range near the resistance level. In the case of Hong Kong Exchange, looking at the share price now, the Hong Kong Exchange shares listed on Hong Kong Exchange is currently at $309.60 as of 3:45 p.m. on the 13th of June. Now that is pretty close to the resistance level that Daryl sees on his chart. In this case, if we think that the stock might go down to a support level of 299, as seen on Daryl's chart, we will select a put. We'll input the target price level of 299 where we can exit from this put warrant, which is 3.4% lower from here, to see how this put warrant will perform instead. In this case, this put warrant WQLW tracking Hong Kong Exchange shares will be 16.3% higher in 2 weeks. Increase the number of weeks, and you see that in this case, by the 5th week of holding onto this warrant, 5 weeks from 13th of June that is, it will make only 2% as a return compared to the 3.4% loss on Hong Kong Exchange shares. This means that this put warrant will no longer produce a leveraged return relative to the share price move. Hold on to it for 6 weeks, and this warrant instead will fall 2%, even if Hong Kong Exchange shares fall by 3.4% in one's favor. This means that the maximum holding period on this put warrant should be before 5 weeks from now, around the 4th week mark, 1 month from today.
It doesn't matter what methods you use to select your stock pool. At some point, before you make your final selection, you will need to visually assess every chart. In this case, we've done half a dozen. But it doesn't have to be a long and involved process. The trading opportunity should be clear. If it doesn't leap out of the chart at you, then ignore it and go for opportunities that are much clearer. But one final comment, one final important point about trading in the current Hang Seng environment. It's your choice as to what you decide to trade. But the market behavior suggests we should not try to defy the trend. It's going to take more than your money to stop these strong trend behaviors in the Hang Seng. I wish you every success in your trading.
Thanks, Daryl. Until next time. Thank you for watching our chat today, and do subscribe to our newsletter and follow us on Facebook and Telegram to be notified of our next video. You can find the links to the warrants in this video's description. Have a good day with the markets. Bye-bye.